Well, it was a strong end to the week last week for equities after a cooler than expected US CPI report, and it's been a strong start to this week as well, amid a fresh wave of optimism in terms of US China trade relations, though in turn, that's seeing gold and other precious metals start to lose their shine once more, even as the foreign exchange market, frankly, seems to remain half asleep. Nevertheless, it is a bit of a monster week ahead for financial markets this week. Of course, those trade talks continuing with President Trump meeting President Xi on Thursday. We've got four G10 policy decisions in the mix as well, including likely rate cuts from the FOMC and the Bank of Canada, plus earnings from about 45% of the S&P by market cap, including 5 of the Magnificent 7 tech names. Plenty then for us to discuss on the trade-off this week. So without further ado, let's crack on with the show. So a busy week for markets last week. It's going to be probably about 10 times busier this week. Joining me, as usual, to try and make sense of everything that's going on is the birthday boy, Ryan Littlestone from Forex Live and Forex Analytics. Ryan, very good morning to you and a very happy birthday as well.
Thank you very much, mate. I noticed my desk was a little light of cards and presents this morning from you, so I assume they've got lost in the post once again.
I was going to say in the post, mate. In the post. Don't worry. I'll pop to the petrol station when we've finished recording and get something for you.
I look forward to some old ropey daffodils or something later.
Yeah, you should be thankful that that's what you're going to get. Well, it's certainly been an interesting start to the new trading week. Of course, recording this on Tuesday morning, which makes a bit of a change for us. But yeah, stocks at new record highs, gold falling off a cliff. Everything seems to be solved in terms of the trade war. What's not to like, I guess?
That's going to be the question indeed. Will that be the case come the end of the week once we get all these this meetings going on in Asia, Trump and Xi and everything going on? It's going to be a dicey end to the week, I think.
Indeed, yeah, I think you're probably right on that one. So without further ado, let's crack on with Topical Thunder. So we'll kick things off with trade because, of course, we came into the week and we certainly ended last week thinking that the meeting between President Trump and President Xi on Thursday in South Korea would be really the sort of main event, the main risk to navigate. But it seems that Treasury Secretary Scott Bessent has kind of stolen both of their thunder on that one because he held some trade talks with his Chinese counterpart over the weekend in Malaysia, and frankly, they seem to go about as well as anyone could have ever hoped they would go. The two sides seeming to reach an agreement on absolutely everything, whether it be shipping fees, whether it be agricultural purchases, whether it be this threat of a 100% tariff, which Bessent now says has gone away, whether it be export controls on rare earths, which China are now due to delay for a year. It very much seems, right now at least, as if everything is sold and it's all sort of solved and it's all sort of fine and dandy once more. Frankly, the meeting between President Trump and President Xi looks like it's just going to be an opportunity to basically rubber stamp everything that the two sort of understudies have agreed over the weekend. Maybe they'll sign the TikTok deal when they meet, and they'll probably extend the present trade truce at least for another 90 days, if not longer. But I suppose on the whole, we can really put this down to another episode of the Trump pantomime, the art of the deal yet again, escalate to de-escalate, bring the other side to the table, get some negotiations moving much quicker than they otherwise would have been, extract some concessions, and then run round doing a victory lap. Now, I think it's important to say there are plenty of question marks out there around this, and there has been rightly a lot of skepticism around, whether China will keep to its end of the bargain in terms of some of these soybean purchase commitments and how long the truce might be extended for and what the details of all this are likely to look like. But frankly, I'm not entirely sure that matters for markets in the here and now. What does matter is that it looks like we're going to be going back to the sort of quote unquote status quo. And that means that trade risks can fade to the back of the mind once more. We can focus back on what remains a very, very bullish fundamental story. Earnings growth very, very strong. The underlying US economy remaining resilient. Of course, the government shutdown skewing our view of that somewhat, and the policy backdrop becoming looser. All in all, equities on the front foot, as we said. The S&P looks like it's going to hit 7,000. I was previously saying before the end of the year, the way it's going, it could get there before the end of the week if we get some decent mega cap earnings. Really, this does not look like a risk rally that you want to be fading. Certainly not considering that the first 2 months of November are about as bullish as you can get from a seasonal perspective as well.
Yeah, I think there's two potential risks from this
Oh, here we go.
Trump Xi meeting. One I'm going
I
to sort
knew
of
you'd
talk
be
about.
downbeat.
No, I'm positive. I'm chipper, but you've got to look at the risks on both sides of the card. I'm going to look at one of those risks in my topic, but yeah, I mean, it all looks like everything's going tickety boo, as you say. Besant's smoothed the landscape ahead of that meeting, but what are we going to get from it? We might get a deal on soybeans again, the deal that we had first time around that they didn't adhere to for pretty much all of ever since they got the deal. TikTok, who gives a stuff about TikTok in the grand scheme of things, in global economic terms? TikTok isn't a trade deal that's going to get everyone's economy running hot. So a lot of this stuff that they're talking about is old stuff. So I think the positive risk is that they knock something in to all these talks to something we haven't heard about. Maybe some other deals. Yes, we've heard about rare earths, but there could be a lot of other stuff as well. We could be talking other energy supplies, things like that. So there is a risk of some extra positivity going into these talks. I think it might end up being a sort of buy rumour, sell fact when we get to the final super nuts of it. As I say, if it's just stuff we've already heard about, TikTok and the likes, then yeah, the calmness prevails for at least another 90 days, as you say, or until someone gets ticked off and decides to lob tariffs on, or port fees, or anything else that triggered the last round of arguments. So I think this time is different. It seems we're only one step away from things turning sour, and they tend to turn sour more often now than they did last time. And I think that's something that's concerning.
Maybe. But you got to remember, it's the greatest deal ever. It's the biggest, the best, the most beautiful deal that the world has ever seen, until the next one that he signs, of course.
Yeah, exactly. A bit like birthdays. They're the best one ever until you get to the next one and realising you're 60 and well over the hill.
Look, mate, we know it's your birthday. We've mentioned that. You don't need to keep dropping hints. Your card's in the post. Anyway, you want to look at things from the Chinese side.
Yeah, I'm looking at China and the currency in particular, because I spoke about China last week and the possibility of them easing rates, and how the currency may become an important tool if things go sideways with Trump. I've been watching the CNY fixes that they bring out every day, and they've now brought the fixes down to the 708s. They were fixing in the 711s at the end of September, and they've been slowly bringing them down, which tends to insinuate that they're going to let the currency move a little bit. CNH, US dollar CNH, is now traded down through 712, down through 710 even, and that's in tandem with dollar CNY going the same way as well. Now, this move may just be nothing. It might just be some market players thinking that the Trump Xi meeting is going to have a positive outcome, as touted by Besant, and that it's going to encourage maybe some money into China. However, what it also means is that China or Xi may not look to be playing ball as expected at the meeting. That'll be a bit of a risk, a bit of a turnaround, or maybe even something goes wrong and this Trump meeting doesn't even happen. And this move in the currency is them actually front running maybe some protectionist measures for when that sort of news starts to drop, or if things go wrong after the meeting. So I think for the currency wise, this is a definite watch this space moment for the one in this week's meetings, because big news will likely see big moves in the currency as well. And for dollar CNH, we could be about to see a new phase lower. So any big headline rally that we see here, rally in dollar China, is one I'll potentially be looking to hit. So I think a lot of volatility is possible in this pair, and they may be up to some shenanigans.
Well, when are they not up to shenanigans, I think, is maybe the better question. Although I do find it interesting, again, and I think we mentioned this either last week or the week before, that the CNH and the CNY have been, I would almost argue, surprisingly well behaved. And I do just wonder whether that's a sort of implicit and subtle nod from the Chinese side that actually they don't really want to escalate things too much either, because we know that they have used the currency in negotiations before. We know that they are happy to embark on a massive devaluation if they need to, in order to sort of act as a bit of a shock absorber for some of the tariffs if they were to go into place. So I think the fact that they haven't done that, again, speaks to the fact that they are open to negotiations, and arguably they don't want a negative outcome from these trade talks. They don't want a restoration of the effective trade embargo that we saw in April and May. So yeah, certainly something to keep an eye on. But if it is a case of just rubber stamping what looks like it's already been agreed, then yeah, I'm not sure I hold out as much hope for volatility as you do, if I'm being honest.
Yeah, I mean, I watch this currency a lot. So when it's nice and calm, and you know where they want to keep things, everything's good. I don't know why all of a sudden they're just allowing the yuan to strengthen a little bit. If stuff blows up, we've seen that dollar China tends to rally a huge amount, as you can see by some of the spikes on the chart there. So the fact that they're just allowing it to this pair to dribble lower a bit, the yuan to strengthen, just as my sort of spidey sense tingling a little bit, that they may be up to something.
Yeah, well, we will see. Your spidey senses are really wrong, mate. So maybe you're onto something there. Anyway, moving on from Mystic Ryan down on the south coast, we do of course have a whole host of policy decisions this week. Ryan's going to cover a few of those in a moment, but I just wanted to zoom in on the Fed in a little bit more detail. Of course, we are, I'm going to say it, basically certain to get a 25 basis point cut from the FOMC this week, which would lower the target range for the Fed funds rate to 3.75% to 4%. Again, not going to be a unanimous vote among committee members. Governor Moran is going to vote for at least a 50 basis point cut. He's basically pre-announced that decision already, although I wouldn't expect any hawkish dissents, although both Schmid and Musalem have been relatively hawkish in recent commentary. I think they're probably going to fall in line with the majority of the committee and vote for that 25 basis point move. Of course, like the rest of us, the Fed are basically flying blind at this moment in time because we are 28 days into a US government shutdown, although Chair Powell, when he spoke a week or so ago, did say that the outlook hasn't changed too much since in the last 6 weeks, since the September meeting. So as a result of that, and considering that the inflation numbers last week were actually a little bit softer than expected, there's really nothing to deter the Fed from continuing to take this path of least regret and delivering a rate cut, and probably following that up with another rate cut at the December meeting as well. Given the shutdown, I think it's pretty tough to envisage major changes to the policy statement, although they'll probably acknowledge the sort of fog of uncertainty that we see at this moment in time, given that no one really knows what's going on as a result of this data void. And given that, I think the press conference will probably be a bit of a dull affair as well. There's not really anything that Powell can say that he hasn't already said. The Fed's focus very much remains on supporting the stalling labour market. The Fed continue to view tariffs as a one-off shift in the price level, and really there's not a lot else the Fed can do until they get some data to tell them otherwise. What could be interesting though is the balance sheet. Now there have been, and we mentioned this on the show last week, continued signs of tightness in US money markets. Of course, the Fed continuing to run down the size of the balance sheet. That's at about 21.5% of GDP, and they've got less wriggle room than they would arguably want, given that reverse repo usage is basically zero. There have been a lot of calls on the sell side that as a result of this tightness, people tapping the standing repo facility, overnight repo rates rising, et cetera, that the Fed could end this balance sheet runoff on Wednesday night. My base case is that they probably hold out until December to do that. I think there's a risk that if you went early, for want of a better word, you could sort of lead market participants to think, what do they know that we don't? What are they panicking about? What are they worried about? Et cetera, et cetera. But if they did bring quantitative tightening to a close this time out, it wouldn't be a huge surprise, with the focus then moving to when do they begin open market operations again? When do they start to expand the size of the balance sheet? Overall, though, I think it's very tough to trade that one unless you're massively in the weeds of financial plumbing, which neither Ryan nor I are. And I think fundamentally the FOMC on Wednesday is going to just reiterate that the path is one of monetary policy becoming looser. The path is one of consecutive cuts, not only this year, but probably next year as well. And overall, the Fed are back with the Fed put, backstopping risk appetite very, very nicely indeed.
Yeah, it's a bit difficult to try and drag a trade out of this one, what might happen. Yeah, I think you're right on all the points, really. One thing I would look out for is maybe a mention by Powell of what data they are actually watching during the shutdown. We know that now and again he can drop a bit of a hint what data points they watch. The Beige Book is something that came up, which is a survey run by the different Federal Reserve regions, just a look at the economy. So they do have access to some on the ground data, and it's that data that might be important. I know you raised, I think it was the Chicago Fed unemployment rate coming in at 4.35%, up from 4.34% in September. We had that conversation, does it include all the furlough workers, and how much does it include? So they are getting their regional Fed numbers. And really, that's all we've got to go on at the moment, trading wise. So as that data drops, we'll have to look at it and see if we can trade it. But yeah, I think this is going to be a bit of a can kick meeting. Try and get through without dropping any major take bombs, and move on to December.
Yeah, I would very much agree with that. I think the absolute last thing Powell is going to want to do right now, given where the economy is rock the boat too significantly. The other thing on the Fed, of course, I was going to call it a race. It's more like a sort of stroll for the next Fed chair at this point. Trump was saying that he hopes to have it wrapped up by year end. This thing seems like it's going to drag on forevermore at this point. We know who the final five are in the mix, but there just doesn't seem to be any particular urgency from the administration to actually get this final round of interviews done, get a few of them in front of Trump and give us a name. And the reason I bring this up is because this time in 2017, it would have been, we knew Jay Powell was going to take the job. We knew he was going to be nominated. He was stood in the Rose Garden next to Trump. It was all smiles. Of course, the relationship has soured rather significantly since. But it does seem like we are going to be waiting a hell of a long time for the identity of the next Fed chair, which makes the 2026 outlook much, much harder to discern.
Yeah, I think we might get something a bit sooner. I think once we get through all these this Asia summit and Trump gets back, then I think he's going to get his teeth stuck into the shutdown, and I think Bessent's probably going to start putting his finger out over these Fed nominations. So I wouldn't be surprised if we hear something middle towards the end of November on that Fed side. So yeah, ears open.
I was going to say, I certainly hope you're right. But it's not just the Fed in focus this week. There are 3 other G10 policy decisions as well.
Yeah, we've got a few coming out. I'm going to do a quick rundown of all the other meetings. Going to start off with the Bank of Canada also on Wednesday. They're widely expected to cut rates 25 pips down to 2.25%. The data's been a little bit mixed of late. The jobs market has been up and down and up again. And the unemployment rate, though, remains stubbornly high, around just above 7%. Inflation, that's just starting to trend higher after hitting the low of 1.7% this year, came in at 2.4% this last week. Core measures are also showing some stickiness too, so they're not out the woods either on the inflation front. Growth overall remains weak, and that's something that Governor Macklem has been lamenting over. So I really see no reason for the BOC to stay on hold. But I think of all the central banks this week, this one perhaps carries the bigger risk of them going against consensus, even if that risk is really small. The ECB, they should pass by without a hitch. I'm not looking forward to this one. They think they have inflation in a good place. They think they have rates in a good place. They think the economy is resilient. So they should really enjoy their moment of peace, because such things rarely last, particularly for those guys. The next forecast update doesn't come until the December meeting, so this is likely just a placeholder meeting, unless Lagarde has seen any material changes to their view since the last meeting. And finally, we have the Bank of Japan, which they're in their hike opportunity window, if we can call it that. But being Japan, that window is a bit of a large one. It's sort of from now until maybe the end of Q1 next year when they could hike. So they're expected to keep rates on hold this week, but again, those chances aren't zero. The market probability has a rougher 10% chance of them hiking. So really the importance from this meeting is any signal they give about future hikes. So it may not be about what they do now, but if they indicate that they are on the right path and are still looking to hike. In terms of the data and the economy, they have relatively stable inflation, but real wages turning positive and staying positive would be the icing on the cake for them to hike. So that's likely the key metric moving forward. So unfortunately, it doesn't look like it's going to be a volatile set of central banks, but never say never in this game.
Yeah, I think I would very much echo your assessment there. It comes to something when the Bank of Canada are the most interesting of the lot, doesn't it? Apologies to any Canadian viewers. But yeah, there is a chance that they do decide to just stay on hold. I think there have been a few one-off factors that have skewed that inflation number higher, as you alluded to, that realistically the market's basically fully pricing a cut. So I don't think they're going to want to cause too much of a surprise. The ECB, even by their standards, it's going to be really dull, isn't it? There's frankly nothing new that they can say that they haven't said in September. The Doves, if there are any left on the governing council, they're going to keep their powder dry until December and that next forecast round. And if that shows a bigger inflation undershoot, then they're going to try and push for another cut before year end. If you're listening, please don't. I've got a lunch riding on that one. But frankly, the only interesting thing about the ECB is whether my lookalike will be at the press conference. And then the Bank of Japan, as you said, I think the BOJ will probably hold off this time out. What's interesting is that we are 2 and a bit days out from the meeting, and there haven't been any sources stories from the Japanese press that I've noticed, which is always a precursor to them doing anything. And the sources stories we have had from the Western press, for want of a better word, have all indicated that they're in absolutely no rush to deliver a rate hike. They're probably going to guide that, if the outlook is realised, they'll tighten again, leave on the table the possibility of a move before the end of the year. But again, that's what they've been saying for quite a few months now. So, there's a lot on the calendar this week. Is any of it going to surprise? Possibly famous last words, but I really don't think so.
Yeah, no, I think that's the case. I mean, the other thing to look at in the Bank of Japan is that we did have 2 voters for hikes at their last meeting. So just in case that changes and maybe it goes to 3, or one of them thinks that now's not the time and reduce to 1, that's probably going to be where we see any big volatility.
That's a very good shout, actually. Although, of course, the big change from the last BOJ to this BOJ is Takaichi has come in, and we know her views on the BOJ. She has watered them down a little bit, but safe to say she is still not a massive fan of rate hikes. So we will see whether that weighs on anyone's opinion. Anyway, let's move on to our plays of the day. Right. I'm going to look at gold this week. I've made this chart 3 times and I couldn't be bothered to make it again, to be honest with you, despite the fact we've fallen another $40 since I sent this to Kyriakos earlier on. Bullion continuing to break down in recent sessions. Spot not only below the 4,000 an ounce mark, but also briefly below $3,900 an ounce in early trade this morning, which brings the decline from last week's record highs to well over 10%. But even with that, we're still up about 50% on the year, which gives you an idea of how, frankly, remarkable the rally in precious metals has been over the last 9 or 10 months. To be honest with you, given how far and how fast we moved, this sort of froth coming out of the market isn't exactly a disaster, and I don't think a period of consolidation would be an especially bad thing. The question now is, where do we consolidate? Obviously, a lot of people, including myself, had thought that $4,000 an ounce could have been that sort of floor underpriced. Obviously, that is now not the case. So we look to the downside. The 50-day moving average comes in about $3,800 an ounce. Are we going to stall out there? If we do, and if we remain north of that level, then clearly the bull trend is going to remain intact. I'll be clear, I think the fundamental bull case is still a very, very solid one. Reserve demand has not gone away. The risk of inflation expectations unanchoring hasn't gone away. Geopolitical risk hasn't gone away. But it's pretty clear that the bears have the upper hand in the short term, at least, and that gold has, temporarily lost its luster. Ryan.
I'll refrain from getting a card out for that. I can't be bothered to expend the energy reaching across my desk. My play of the day. I'm going for a bit of a long shot in this one because I'm picking a Bank of Canada play of the day for this week. I'm going to look to buy a surprise hold by the Canadians. If they do cut, obviously, I don't think there's going to be much volatility. So I'm really just looking at a trade if they do something different, and that does bring a bit of volatility. So it's a bit of a low chance trade, but it's a plan nevertheless. So a surprise hold would be volatile for the Canadian dollar. So I'm looking for a dip in dollar CAD way down at the 61.8 fib of the September leg up at 38.61. That's also a big all-time big level that I've traded before. So I'm marking it as a possible stretch point if they keep rates unchanged. Now, there is also the possibility that they do cut, but then give a strong indication that they're done and they're on pause, which might also bring about of Canadian dollar strength. So there's two possible roads to this trade, but I can't see it happening, but might as well plan for some volatility anyway.
Good stuff. Well, that does bring us to the end of another show. Thank you very much, as always, to the birthday boy, Ryan Littlestone from Forex Flow Live and Forex Analytics for joining me. Thank you also to our producer, Kyriakos. Brilliant work as ever, and working on a day off on a bank holiday as well. Thank you very much indeed for that. And thank you for watching as well. Hopefully you've enjoyed the show. If you have, drop a like on the video, leave a comment as well. Let us know how you're trading the markets, how you're viewing things. Ryan's going to go off to enjoy the rest of his birthday. Kyriakos is going to go off and put his feet up. At least one of us is going to do some work today, and all three of us will be back with another episode of The Trade Off this time next week. Thanks as always, and goodbye for now.